Hello, today is the 23rd of February 2011. Welcome to today's silver log and some silver analysis. The opening chart on the screen are the amount of views that the silver log webpage has been getting, and it's been growing quite well. This is a logarithmic chart as before it was 100 people every day coming to the site. Now it's getting well over 3, 4, 500. Yesterday there was almost 850 people that went on to the blog. So thank you very much. And I would, what I'm trying to do is update the blogs through the week after the 4 o'clock Eastern close. So roughly around 4:30 Eastern, 1:30 p.m. Pacific is the intention to update the blog. A lot of people have been talking about oil lately, and a few requests to put in some oil charts up. So what I've done is I've put up this weekly line chart. There's no dates on here, but it's really more about price action. Well, there's a couple dates, July of '08 and March of '09. And I want to talk about Fibonacci within this, because if we take the high of 146 and 2/3 and the low of 32 and 3/5, the 38.2% exponential Fibonacci level was 57.62. And that level was very small and minuscule resistance. It just traded along this area for a few weeks, and then it came up to this 81.84 level, which was resistance, and now it's breaking it. So basically all that's happened, and it's not really that basic, is that this is becoming a failed move. The major dive, the market dive of '08, '09 is a failure. And I'm using Fibonacci rule to state that a confirmation break above this line would be that of a failure. And this is what's happening now. All that's going on this week with the price getting close to 100 is we are confirming we are going higher. That's about it. However, a lot of traders don't use or understand exponential Fibonacci. They use linear, and the 61.8% linear is 101.89. At the same point, the 76.4 exponential Fibonacci is 101.69. So here we are today, very close to 100. Don't be surprised if the market has some resistance, roughly between 101 and 102. Let's now move on to the silver analysis. We're having another volatile day today. Markets chopping up and down, but we are still consolidating here within the this period in here. Sort of like it was in here, sort of like in here. You have big moves to the upside, and you consolidate the market through time. Right now, that is what the market is stating, and what we'll do now is we'll switch this up to the 15-minute time frame. If you were watching if you went to the blog yesterday or this morning, I talked about manipulation. Yes, I manipulated this so that it went to the 34.20, because this market is SLV multiplied its prices by 1.0228. SLV does an amazing job at mirroring the price of silver. It's not really silver in the sense if you buy SLV, you must and can only trade it in currency. Where in bullion, you can trade it for currency or gold or food or water or a vehicle or a house or whatever. You got more options with bullion silver than you do with SLV. But anyway, the high was 34.20 and or 34.33, excuse me, and the low was 32.40. And since then, we're basically trading within, I guess, a wedge pattern. It's really hard to see on this chart. But anyway, what I have done is I have calculated some Fibonacci. You take the low of 32.40, which was just many hours ago, and the high of 34.33 earlier this week. And the linear numbers, which is pretty much the same as exponential, not much of a difference, but the numbers are 33.14 and 33.59. If we can have a confirmation above, we'll even say 33.60, the selling that occurred would become of a failed move. And this is what's been going on today on an intraday level. This is as of 12:26 p.m. Eastern Time. So if we draw a line here, even at the 59 mark, we'll just say roughly somewhere around here. And this is that Fibonacci that I was talking about. So you get to a level here, you're like, okay, this is where it's supposed to find resistance. But it didn't. It went above it. And this was really, I was liking this because this was telling me instead of this 60-cent level being resistance, it's that of being support. And this could have potentially looked like a bear trap, but instead this was the bull trap. The market sunk below. So now this 3360 level has become a level of resistance. And if it comes back up again, and I really should be saying when, whether it's today, tomorrow, next week, next month, that it would need to get above it to confirm that last selling to be a failed move. But I wouldn't put too much into this selling right now. If anything, you would want it to hold the 61.8% level from the same low of 32.40 and this top here, which is 33.75. And if we do that, we can. I don't know why. There we go. I don't know why those screens were on the bottom, but anyway. So we put in number 33.75. That means for the rally we have just had, as long as it really holds 32 at 90, then even 33 for that matter too, then I wouldn't be too concerned as of yet. Okay, so we priced this in dollars. This is, oh, I didn't mean to do that. That looks cool though. Anyway, we priced this in dollars, and it's U.S. currency, U.S. fiat currency. But we can price silver in many, many different things. And what I'm doing here is I'm pricing it in AUMG. What that stands for, AU stands for gold, as in the two symbols for its periodic, that's used on the periodic table of elements. MG stands for milligrams. You need 1,000 milligrams to equal 1 gram. So therefore, right now, we need the price of silver is worth that of 3/4 of 1 ounce of gold. That would be its value. 750 milligrams or so. This is currently its area. And this was the market bottom. So we can see that it has went from a little over 350 and a little under 400 to 750. So what this is telling me is that priced in gold from the crisis bottom, silver has doubled in value priced in gold. The bottom in fiat currency was a shade under $8.50. So we'll say 8.5. If we multiply that number by 2, we get 17. If we multiply that number again by 2, we get 34. So the price of silver in fiat U.S. currency has went up 4 times its value. But at some point, how are we going to price silver after there is no currency? It's not going to be in dollars because, quite frankly, the odds don't favor that they're going to survive that long. And something's going to have to take over. Now, will it be gold? I don't know, but this is just another way of tracking the price. Just like the price in dollars, it's showing the same sort of momentum. It had a correction through time back in 2010, broke the resistance, and over the last half year has had a massive explosive run up to the upside. If we switch this now for many years, going back to 1993, we are now getting very, very close to the 1997 highs, which is that of over 750 milligrams of gold for 1 ounce of silver. This is really not the gold to silver ratio, but it's the silver to gold ratio. And it's another, to me, I just think it's a better way of doing it, or another way of doing it anyway. Instead of seeing the gold to silver ratio plummet, I'd rather see the silver priced in XAU go higher. That's just my opinion anyway. So just want to end this video at that. But one more quick thing too is if we take a look at the level of this top and whether you pick and this bottom in here, then the approximate Fibonacci level would be somewhere around here. Obviously, the move that brought this this price lower has been a failure. So mathematically speaking, we should at least have a test of 760 or so, which really is going on right now. Once again, the blog should be updated roughly approximately around 4:15 to 4:30 p.m. Eastern Time today. Take care.